Stocks continue to melt up. Let's talk some options and the role of positioning with Mr. Kevin Green. Kind of seems like this is what the doctor ordered, KG. Just looking at how we started the week in your discussion with us about how the risk was still very much to the upside.
Yeah, definitely. And now we are starting to see a little bit of a widening out. The problem that we had on Monday and Tuesday was this compression in the market, and these gamma levels that we have been looking at, or the dealer exposure, was only giving us around 20 points to the upside or downside on a day-by-day basis, which is not a lot, to say the least. But today, when you're looking at the open interest side of the equation, we are starting to see a really nice development here. And I have it highlighted in the histogram in blue, that blue chart or that blue box there. You're seeing a fair amount of buildup there. Those are all calls happening right now. Now, open interest is going to be delayed by 1 day. We have to keep that in mind. So this will change by tomorrow. But that just shows you the fact that we are kind of continuing to move through pretty much all of those strikes. I think the last one in that bar is around 56.30, which we're kind of approaching that right now. But if we can kind of get through that area there, Oliver, we're going to have pretty much clear sailing until you get to around 56.50, and then start looking at more upside, 56.70, which is a lot of trading activity taking place right now as far as call sellers. And then once again, I mean, we're looking at 5,700. This is the breakout that we've been kind of waiting for over the last week and a half here. If we can maintain these levels. Tomorrow, this chart will change, and we probably will see a fair amount of drop off in the call activity at those levels. And once again, moving those strikes to the upside. And this chart just kind of highlights once again the fact that we are seeing this widen out. On Monday, you were saying, man, look, this is compressed. And it was compressed. Now, this is a better outlook. This gives us a lot more wiggle room. That downside dealer negative level is still sitting at 55.45. That has not moved up, which is great. And now that balance area is sitting around 5,600. So this is actually really constructive going into this CPI print tomorrow.
So one thing is that it kind of seems like a good lesson then when the levels get really compressed and particularly skewed to the upside as they were. Those seem to be pretty constructive moments generally. And now that we've kind of realized that, as the negative and positive dealer levels widen back out, why do you say that the downside, it's a good that it's still down there? Like, because that means that we could handle like a little pullback here and there without causing catastrophic, reversal, like the buffer zone is wider?
Exactly. So when we talk about that lower level or that lower negative gamma level for dealers, when we get to that level and get through that level, the reason why we focus on it from options flow standpoint is that dealers, if they are off sides, they'll start selling along with retail traders and institutional traders. And if everybody's selling at the same time, Oliver, what happens? Market continues to go to the downside. That's why those have been very critical areas of support that we've been following over the last couple of weeks. The reason why we say that's actually a really good thing is that the fact that even if we kind of had maybe a little bit of a reversal, it doesn't really put the dealers off sides. What you do not want to have happen is the dealers selling with you. You want to have dealers buying with you when we have these squeezes to the upside like we're kind of seeing today. That's really constructive for the long call buyers and even the long stock holders in the market. But when you are offside to the downside, that's why we care about that red line there. So yes, I once again, this signifies that the compression for now may be over, especially with that print tomorrow. Gives us a little bit more wiggle room. And that's really good if you are an intraday trader, no matter if you're an upside trader or a downside trader.
Okay. All right, so it seems like status quo is working. We're pretty much holding in. Anything that from like a vol VIX standpoint, I mean, VIX is getting down pretty low again. I guess if the market makers get their way and the upside kind of grind continues without any like, explosive movements, we should just kind of keep eating away at vol as a result.
Yeah, I mean, everybody's really trying to sell volatility at this point. And this is kind of what we've been seeing. When you're talking about the VIX, though, we have an interesting development for today. And this is something that does happen, especially around really big macroeconomic events, as well as this repositioning taking place. Now, this is just a today chart. Today, it's a 1 minute or 5 minute chart here. You're seeing the SPX up, and you're also seeing the VIX up. And that doesn't really happen. It's only around 20% of the time where you see a positive correlation, and that correlation will then correct pretty rapidly. So what does that mean? That means either the S&P 500 may correct to the downside and that VIX move is going to be realized, or the opposite, SPX continues to move up and the VIX starts to move back to the downside. Two reasons why we are seeing this. Once again, we talk about the call activity today from institutional traders, where they have these short calls at the 5,600 level, and they're buying those calls back and they're selling upside calls. You also have the speculative day traders that are in the market too, which doesn't have that much of an impact when you're looking at the 30-day VIX, but they can have an impact on that. So all of that call activity is also creating this melt up with the VIX. And then we also have the event risk tomorrow. And so this is just an anomaly that we are seeing. And it's I would say, kind of rare that we do see it. But it is also an interesting take to see a melt up and VIX up at the same time. That means that we are just going to continue to crank higher potentially throughout the rest of this close here.
Well, the only thing is that it also does, they'll kind of speak to the turn towards a bit of maybe irrationality of the rally, though, to some extent, doesn't it? When vol is picking up, because that means you're really starting to skew the price of the calls in such a way that like it reflects nobody betting on like downside. So this is where we get some. I know Jim Carson a few times in the past, and I don't know his like immediate view at the moment off the back of my palm, but the VIX up, stocks up thing, vol up, stocks up, it does kind of meet the criteria of like when you might be getting to unsustainable path.
Yeah, no, and that's what we would definitely want to highlight. I mean, the correlations don't really last for that long. So yes, I mean, if you are a bull, you still want to say, okay, you have to keep this on your radar for now. But once again, kind of looking at the technical landscape that we have, as well as the stock price movements that we've seen, especially from mega cap tech, you got to kind of lean towards the fact that, okay, maybe this is just excessive call buying, as well as the call premiums, those out of the money calls, that roll up that we talked about. Rolling up 70 points, 80 points, that's what has an impact when you're looking at the VIX. So that could also explain it. But you're right. I mean, at the end of the day, what if we do have a bad print tomorrow? That VIX could spike. We could see a dramatic move to the downside for the S&P 500. So, we definitely have to keep that in mind. The last thing I will highlight, though, you could also have stock replacement strategies taking place, Oliver, which is where institutions look at buying calls instead of actually buying actual physical stock, right, in order to get upside exposure, but also to minimize the capital that's needed in order to get into that position. That's also a topping type of scenario, but that also, that's a topping type of scenario, but that also can lead credence to this excessive call buying that we're seeing across the board when you're looking at least the mega cap tech names and the call side skew.
Yeah, good eyes on the VIX versus stocks today. I think that's important because, obviously people are just stretching their willingness to speculate to the upside. All right, good stuff, KG.